Hi, everyone. Thank you for logging on with us today. We're just going to wait a few more moments to wait for a few more folks to sign on. Thanks. Hi, everyone. Welcome to the TBR Webinar Series. Today, Practice Manager Patrick Heffernan, Senior Analyst Elisa Baklova, and Boz Ristoff and Research Analyst Kelly Liziska will be discussing why asset-based IT services will rule 2019. Before we get started, we have a few housekeeping notes. At the bottom of your screens, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you'll receive an email with a replay link, as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Patrick to begin the webinar.
Thank you very much. So I am Patrick Heffernan, and I run the professional services, IT services practice here at TBR. And I'm going to let my colleagues introduce themselves because I'm not going to do most of the talking today, and they are. So you need to hear their voices now that you can see their pictures. Elisa, you want to go first?
Thank you, Patrick, and thank you, everyone, for joining this webinar. My name is Elisa Bakalova. I'm a senior analyst in the professional services practice, and effectively in Patrick's team. I lead our management consulting benchmark, our IT services benchmark, and I specialize in several vendors. I cover Atos, Capgemini, IBM Services, Cisco, and BearingPoint.
Hi, I'm Kelly Liziska. I'm an analyst on the professional services team. I cover Fujitsu, HCL, as well as support on the IT services overall research and the management consulting research.
Hi, everyone. This is Boz Ristoff, senior analyst on Patrick's team as well. I lead our research around digital transformation as well as automation, and Accenture, Deloitte, Infosys, among our vendors here within TBR.
Excellent. So we got the team together today. This is our it's our third webinar around predictions. And what we wanted to do this time was really kind of dive deep on the predictions that we made going into 2019 and sort of talk about how those different predictions are going to play out, at least the way we see them. And the one that we actually got a fair amount of feedback on when we started rolling these out with some of our clients and sort of seeing how they were seeing the market going into this fall and winter was around solutions, around asset-based solutions, around asset-based consulting, around understanding how the emerging technologies that we've seen permeating through all of consulting and IT services, how that was actually going to play out for these vendors. And again, if you're not too familiar with TBR, hopefully you do know because you know us really well, we tend to look at these things from the view of the vendors themselves, what their business models are, what their strategies are, and then what their performances are, and put all that together to see if they're heading in the right direction. So before we get too into it, what we're going to do today is we're going to talk about asset-based consulting and asset-based IT services broadly and what we see as the trend. We're going to talk about a couple of specific use cases that we've seen. We're going to highlight a couple of vendors, and then we're going to take it into a little bit broader context, and that's where Kelly will come in and sort of show our bubble chart on that. And then we'll wrap up with looking at the prediction itself and the result that we think we're going to see in 2019. And then finally, we're going to have a little debate amongst ourselves about where we think everything is really going. So before we get going, we do want to take a quick poll of what folks think is going to happen with IT services spend as we go into 2019. In the predictions document that we put out, it's a special report you can get off of our website. One of the things we talked about was how sort of economic and political uncertainty, particularly in the UK and the US, could have a real dampening impact on IT services broadly, and possibly in some specific areas with respect to IT services and with respect to consulting. Of course, we could be completely wrong. It could be that the chaos and the uncertainty will be a good thing and drive increased spend. So we just wanted to throw a quick poll out here to see, yeah, things are going to be bad because of economic uncertainty. Yes, things are going to be bad because the market has shifted. Or no, growth is going to continue the way it's been going. And it's been at about a 3-4% growth rate over the last couple of years, Kelly?
Yeah, roughly.
Okay. So, is it going to continue at that, or is it who knows, maybe it'll accelerate even more. So that's the poll. We'll get to the answers to that in just a little bit. So here's the question, or here's the prediction that we started with, this idea that clients are saying to their IT services providers and their consultants, don't come in with slide decks anymore. Don't promise me, don't show me what don't promise me what my new technology environment is going to look like. Don't tell me what my new business model is going to look like. Actually show me. Put the solution in my hand. Develop the IP with me. Bring a solution to me. And a lot of vendors we talk to talk about approaching their clients with some of their client data already in hand, already part of the solution that they're presenting. So this is definitely something that's being pushed very heavily by client demand, and we think that trend has been part of what's been happening in IT services and consulting over the last few years, where emerging technologies have made it much easier to be able to bring a solution to the table when an engagement begins. This has been an ongoing trend. It's not something that just happened in 2018, but it certainly has picked up. And what we think we're going to see as we go into 2019, what sort of is driving that is this understanding on the part of the IT services vendors and the consultancies. And I keep drawing that difference, and what I mean are you think of the McKinseys of the world and then the TCSs of the world. So across that broad spectrum, they're all expected to come in with a solution, to come into an engagement with some sort of developed IP that can apply directly to the client's business problem or directly apply to whatever the client is looking to them for, and then take it the next step further, whether it's through automation or through analytics, or even getting into areas like blockchain and artificial intelligence, where clients have these very high expectations. And honestly, it does come from the client expectations, which have been, you could argue, have been sort of hyped up over the last few years with all the possibilities around IoT, the possibilities around blockchain, that haven't necessarily become a reality yet, but because those expectations are very high, that's where we're going. So the result of that is going to be a serious impact, we think, on both the IT services vendors at the more SI, kind of the more systems integration and even outsourcing part of the world, as they come in and are able to bring their prepackaged solutions or bring their co-developed with clients' IP to the table as part of it, and the pressure that puts on the consultancies on the other side to actually continue investing in talent. And I got to stop there because we wanted to sort of set that up as the trend and what's been driving all that, and we're going to get to the result at the end. So to put a little bit of meat or context or a little example around this, I wanted to talk about something that we've seen recently that came out of PwC in Japan as an example of a consultancy developing some IP and bringing to the market or to their clients a solution that was more than just a set of slides, that was more than just a strategy engagement or even more than just an operations consulting engagement, that was really a fully baked technology-enabled solution that was brought by a consultancy. So the basic story is the Japanese energy market deregulated a few years ago, and when that happened, it allowed the creation of a lot of middlemen, a lot of retailers that were able to set up, that were buying electricity from the utilities and reselling it into the market. And that, in and of itself, created the need for forecasting, for being able to forecast the energy price in Japan. And while that particular skill or that particular offering exists all over the world in different forms, it really hadn't existed in Japan up until the deregulation went into effect. So with that came an opportunity for PwC to create a energy price forecasting tool, actually a platform that their clients, both the utilities and then the smaller retailers, the mom and pop middlemen shops, could then subscribe to. So again, it wasn't something that PwC would traditionally do, and there are other firms that are out there and have been around for a long time in the market in other regions that provide this service, but this was something new for PwC to bring to their clients in Japan. So why? So they built a platform. They throw the analytics at it to create this forecasting tool. They create the algorithms. They do all that. Why is that meaningful? It's meaningful for three very distinct things. One, it's a different kind of selling model. This is PwC offering a service on a subscription basis, which is not something we typically think of a consultancy providing. I don't think PwC services as a whole are going to shift to a subscription-based model, but I do think it's noteworthy that a firm that has been a traditional consultancy had been sold off, rebuilt again, that they're using a different kind of revenue model, a different kind of business model, their services. The second part is that these clients, not the utilities, but the smaller clients, are not traditional PwC clients at all. They are much smaller than the typical PwC client. They're much more niche, and so you for PwC as a firm to be able to find a way to interact with them. They're new clients. They're not going to be nowhere near the scale that their most important clients are, or even the sort of the bottom half with respect to size of their typical clients. But still, it's important that PwC was able to broaden its client base in this particular way by doing it. And then the third really important piece of this here is what PwC actually brought to the table was internally they had to find the talent, they had to find the capabilities, they had to knit it all together. They actually brought in people from their risk and assurance practice. They had to find a way to create a solution that was different from the individual silos that had already been set up within PwC that were already delivering. And so that's important as well. And then I guess the fourth thing I will throw out there is it's repeatable. They can take this particular solution and go to other markets that are going through deregulation that have similar setups to what's been happening in Japan. So it's a shift in the consulting business model as a whole. The subscription element, the ability to provide services to much more diverse and smaller revenue-based clients, and then the ability to sell those services or repeat those services, repeat that offering in another place. So I look at that as an example of where consulting is heading, where IT services is heading. And now we're going to turn to Elitsa, and she's going to talk about another example that we're seeing. Elitsa?
Thank you, Patrick. And following on to Patrick's story about PwC, I want to talk about BearingPoint, which is a very good example of a company that's in the consulting space, largely in the consulting space, that has really developed and is really targeting IP-based offerings. So innovation and technology-driven solutions are really part of the company's DNA and culture. And BearingPoint, in my opinion, has a well-established process in place to come up with IP-based offerings and to provide them to clients. BearingPoint is a company that we cover in our management consulting research. So really, from a business standpoint, it's an independent and partner-owned company. It's a business and technology consulting provider which has European roots but has global reach. So while working with European clients, it accesses those clients, businesses outside of Europe across the continent. What's specific for this company is that it offers consulting as well as building and running of the solutions. So it sort of resembles an IT services company with a very large and developed consulting business, and a solutions component, something that's not really very typical for the consulting companies that we cover in our management consulting benchmark. And what really drives this is that innovation is really at the center of this company, and the activities that cut across the three business pillars, which are consulting, solutions, and ventures, is really part of those business pillars. So there is a process called the Be an Innovator that pulls ideas that are generated across the companies that are targeted at services and assets. And this combined with, using incubators and ventures drives activities to creating and generating ideas for new services and for IP-based assets and solutions that are the company groups around three areas: digitization, regulation, and analytics. And while, consulting is really the leading service line for BearingPoint, the portfolio for this company is enriched by integrating consulting with technology-enabled offerings. And this is a rule, and this is really part of the company's strategy. BearingPoint is really vocal about it and has been showing it to clients and to the analyst community. So when we group those technology-enabled offerings, I would split them into two categories. The first category is the IP assets that the company leverages in consulting work, and it uses those assets to augment and speed up and improve the consulting activities. Those assets are typically created through client activities and are really a central part of the consulting engagements. IP assets for BearingPoint can be accelerators, and the company has, approximately 60 accelerators that it uses in its consulting work. Those accelerators, they help the clients, for example, make decisions based on data. They help improve efficiencies. They are part of the risk and regulatory reporting requirements. So they're categorized in specific groups. They're integrated with consulting engagements, and they enable the consulting delivery. So, for example, Cloud Navigator is an accelerator. IT Financial Management is also an accelerator. Those two accelerators are part of technology consulting services, and they enable the delivery of those services when the company works with clients during their cloud adoption or during IT cost optimization engagements. The second category of the technology-enabled offerings is what I call the software-based solutions. Those would be solutions that a company develops by itself, or they are created jointly with technology partners. And those solutions are sold to clients through license agreements. But they're also part of the consulting engagements, as BearingPoint goes in and consults clients around adoption of such solutions. And to develop those solutions, BearingPoint also has a process. It selects the mature IP assets that I just talked about. For example, it selects the repeatable accelerators that are used in consulting and productizes them. It makes them, as standalone offerings that are provided as the BearingPoint Solutions portfolio, and they're sold to the clients through license agreements. So those would drive revenue on the solution side, but they're closely tied to consulting activities. And, some examples of such solutions are the regulatory technology solutions the company offers. There's a solution called Hypercube, which is around analytics and data science. Another solution is the digital business platforms, which is, tied to digital transformation activities. And, I want to give Kelly the opportunity to give you a broader picture of the IT services space because there are definitely examples that are relevant for IT services vendors as well.
Thank you, Lisa. So looking generally at IT services, a lot of the vendors have been increasing their co-innovation resources similar to match some of the consultancies. So they have been increasing their onshore co-innovation centers, as well as building a bigger consulting bench, and basically so that way they can work more closely with the clients and be a more relevant digital transformation provider. The centers have also enabled them to better integrate automation capabilities that are already within their portfolio offerings and to communicate that with their clients. So for example, I'm going to talk about Fujitsu. So if you look at Fujitsu, it's one of the larger vendors in our IT services space, but the majority of their revenue is generated from Japan. This works for their advantage in that they can test a lot of their new solutions in the region before bringing those solutions outside, because Fujitsu tends to leverage a vertical-oriented strategy, so a lot of their portfolio offerings are very targeted for specific industries and address particular pain points for clients. So it works in their advantage to test them there before bringing them elsewhere. However, though, despite this focus on Japan, Fujitsu has increasingly been expanding into Europe and the U.S., particularly with innovation centers and delivery centers, which are increasing their proximity to clients, as well as enabling them to work closely and really showcase their own solutions. For example, in 3Q18, so this past, I think it was 2 months ago, Fujitsu opened a retail center in Dublin, Ireland. The center follows their vertical-oriented strategy as it takes a retail approach, but it enables them to showcase their digital analytics and IoT capabilities, but within a retail setting. The center is also building their presence in Ireland so they can build a better client base there and begin to generate revenue from that section. A little bit earlier in 2018, Fujitsu also opened 3 digital transformation centers in Munich, New York, and London. These centers, they're not as vertical focused, but I believe that they are helping Fujitsu transition into a more relevant digital transformation service provider, and it helps them build their brand outside of Japan and not just so heavily focused there. And then moving on to HCL, they're one of the more smaller vendors in the IT services space, but they are slowly picking up speed with their revenue growth. They tend to focus on, for portfolio development, they tend to focus on a lot of IP-led solutions, as well as integrating automation similarly to Fujitsu throughout their portfolio offerings, which enables them to leverage a more software-driven portfolio. They tend to use their dry ice automation and orchestration platform. They integrate it among all their portfolio offerings so that way clients can benefit from the automation capabilities. They also use it internally to improve their cost structure as well as their delivery capabilities for these engagements and to shift into a more software as a service delivery model. HCL also, to build IP and IP solutions, they forge a lot of technology and IP partnerships. Their most notable IP partnerships have been with DXC Technology and IBM. Through the partnerships, HCL is able to expand its product base and platforms, which directly tie back to their Mode 3 capabilities, which is their go-to-market, which has their Mode 1, Mode 2, and Mode 3. So Mode 3 is their products and platforms. So the partnerships directly tie back to those capabilities, but then they also create an opportunity for Fujitsu or for HCL to enhance its core services, which are included in Mode 1, to build out those offerings. Through its partnership with IBM, HCL has developed I think it was about a year ago now, they've expanded their long-standing relationship to focus on 5 products, which include DevOps and automation capabilities. Last week, they announced that they were going to acquire these 5 products, which were previously part of IBM's software portfolio, and they're also including 2 additional products, which build out their security and commerce as well as collaboration capabilities. The addition of the products also build out HCL's client base, which creates cross-selling and upselling opportunities with those new clients based on their Mode 1 and Mode 2 capabilities. However, I do think that HCL could benefit from additional consulting capabilities. It's not really one of their strong investment areas. They don't really build out a strong consulting base. They tend to use partners for that. I do think they could benefit from a stronger consulting partner, whether it be through IBM or a different partner, to help them integrate these products within their portfolio, as well as sprinkle them throughout their legacy clients to try to shift them over into these newer areas.
And that's a perfect segue into what is the sort of end result, or the result we think we're going to see in 2019, is sort of the importance of consulting and consulting capabilities, particularly for the SI, what we consider the SI-led vendors or the technology-led vendors. And when you look at a company like HCL, they're sort of a perfect example of that. So to go all the way back to the beginning, from slides to code, what is asset-based consulting going to do to the business model? And I think to take even a larger step back, what does asset-based or solutions-based consulting and solutions-based services, what does that do for the companies as a whole as they're trying to deliver them? What does it sort of force things to happen? One of the things I think is critical is it allows for a greater alignment between strategy and whatever the emerging technologies are that a client is trying to adopt, or a client believes, or maybe you've told the client they should believe, can make a difference in their business model and can change their business model. So that closer alignment of strategy, of the why part of the consulting with the emerging tech, the hyped up part of technology right now, that actually is a lot easier. It's a better fit for the consultancies that have a established strategy consulting and established management consulting practice. But we have seen a number of the SI-led vendors invest more heavily in their own consulting practices. I think we've seen, if you go back a couple of years with Accenture Strategy setting up a whole, essentially a division on its own to go after that, they sort of led the way in a way for the more SI or technology-led vendors to head down that path. But I think what we're going to see in 2019 is two different kinds of pressure because of that. One is going to be on price. We're going to see a lot more competition around the price for services, for strategy services, for consulting services, for services, IT services related in particular to the emerging technologies. I think we'll see a price pressure there. And as well as the talent side of it, where the ability to hire, find and hire and retain the key talent that folks are going to need to be able to deliver all this for their clients is going to get harder. It's going to become more appealing to work for a large IT services vendor that is investing heavily in their consulting capabilities, or it's going to be more appealing to work for the folks that may actually benefit from all this the most, and that's the smaller, more agile vendors that have more creative solutions, that are able to go to the market faster, that are able to deliver results for their clients more quickly, even if the scale issue comes into play for the smaller vendors. So I think, and in painting that picture of sort of the closer convergence of strategy and technology, and understanding the pressure that we'll have on the large IT services vendors and the management consultancies with respect to pricing and talent, I think that more than anything else shows us that this model is really changing in a substantial way. And I think when we look at this space in a year from now, it will no longer be, from slides to code. It will be what's the next evolution. We'll have forgotten that slides, were part of the equation at the beginning. That's my opening of what we're going to do in just a moment, which is a little bit of a debate internally that you all get to listen to as we discuss what we think is going to happen. So first, the results from the poll, and everyone is very encouraged that we're going to continue to see good growth. That is, to me, surprising. Again, if you read our predictions document, you would have seen my pessimism come right to the front at the very first couple of paragraphs, talking about global warming rising all boats, which is not exactly an uplifting metaphor. But I see more pessimism, but it's good to know that folks are not quite so pessimistic. Boz, you look as surprised as I am.
Yeah, I was expecting a little bit more on the second part around the platform-based solutions. diminish for services kind of a need. So that was kind of that's where my head has been recently in terms of the research and what we see in the market from both vendors and enterprises, how they expect the cost savings from automation and whatnot to be passed along, and kind of I was expecting to see that the traditional services dollars to be shifted towards more of a solution-based sales, which is essentially asset-based discussion that we've been having. Right. So there's a little bit of which is good. That'll keep us both to think about how the market evolves and what folks on the line hear and see and what we see from our research. So certainly something to keep an eye on and revisit 6 months from now or earlier even. And
probably earlier. I think we have another webinar in the next couple of months. But so now what I wanted to do is just have a little bit of a roundtable discussion among the four of us about what's really going to happen, because this question has come up from our clients repeatedly. What is the future of the business model for consulting, for services? How is it actually going to change? And I think using asset-based consulting or solution-based services as a way of looking at the change that's coming. And so we each, the only thing we agreed ahead of time was that we would each take a different point of view. And I'm going to go first. It's my practice. And I'm going to take the view, and you can probably tell if you know me and you've met me before, I get kind of fired up and passionate about this stuff. I think the change is I think it's adapt or die is mine. I think this is going to have a substantial, more than disruptive, a truly business model changing impact on the way that consulting services are delivered, that IT services are delivered. And I have a couple of reasons for that. One, I think using code, not slides, just it gets you much faster to value, and not necessarily the length, the long-term value, not necessarily value that changes a business, that changes your client's business, but it's faster to value in the sense that you're able to show the person that's funding your engagement a much quicker return on the investment they're spending on you. And that makes you as a consultancy or as a IT services vendor, that makes you stickier with your clients. So that's one reason I think it's changing. The second one is that it rewards partnering with the technology vendors. And the technology vendors are changing themselves, and they're looking for new ways. We talked to Google and IBM and Salesforce and Oracle and SAP, and they are all looking for ways to change the way that they deliver, and they're looking for change from their SI and their consulting partners. So I think any change that rewards a partnering environment, that rewards that kind of co-creation is for the better, and is going to have some strong support behind it. A third one is if you're good at managing and monetizing your IP, you're going to see much better results. You're going to see greater profitability. You're going to see, again, more sticky and lasting engagements with your clients. The caveat, of course, is you have to be good at managing and monetizing your IP, and not every one of these vendors that we've been talking about or that we cover in the IT services and professional services space, not all of them are good at managing and monetizing their IP. So that's a really important thing to understand as you look across the space. And then I guess the fourth thing for me, I only had three, and then the fourth one came to me while I was sitting here. This approach pulls through all the other things that you do. And if we're talking in particular about anything related to an emerging technology, you have to have a security component to that. If it's digital, it has to have cybersecurity. And so if you've got those as part of your basket of offerings, and you're able to co-develop with your clients some sort of IP-based solution to their particular problem, you have to find a way to ensure that it's secure. And if you offer cybersecurity as one of your offerings, it's a way to pull through that offering along with what you're doing. So I think it's another reason for the consultancies and the IT services vendors to want to take this approach, because it's a way of expanding their footprint by pulling through related and in the case of cybersecurity, is essential offerings that are sort of have to be baked into it. So that's my opening. Boz, you're going to tell me I'm wrong. It's not really going to change things, right?
Well, I think just going back on the results we just heard from the audience, that seems like most of the folks on the line feel like business as usual from IT services spend. I think where I don't think we're going to see real change is there may be two camps of that change or not change is if you are a publicly traded company versus a private company. I think the folks that are tied to the 90-day sales cycle and reporting to Wall Street and whatnot, that change is, I don't know, like it can be like small, like within Department X, within a region Y, and maybe.
All right.
But at scale, it's impossible. That earnings per share, shareholder value, all that good stuff we learned from business school, that's going to just be that big roadblock to really a transformation change in 2019. Will it change in 5 years down the road, 10 years? Possibly. We're going to see some more of a bigger impact. Do you have to start some sooner or later? Yes. I would say sooner rather than later to make those changes. But I think the Wall Street pressure and going back to the macroeconomic cycle and all that, what we see in overall, is where I think those companies will be more of in a damage control mode and protection mode of assets more so than actually making experiments with something new. Private firms, they have a little bit more of a kind of a leeway to make some changes without being, worried about Wall Street and whatnot. But then we see the partner model being, still all about profit pool sharing and all that. We see a lot of the partners trying to, especially the ones that are in their late 50s, early 60s. They're not as risk-taking, partners, and most of the private firms, with the exception of few, the majority of the partners are, is in that age group, so they're not going to jeopardize their own retirement just for the sake of a bunch of, millennials who want to do something cool. So that said, yes, there might be some, experiments here and there to see and ideas that may be thrown in and try to entertain the idea with clients. But the clients themselves face the same challenges. They have to report to Wall Street, and they also have to, protect their own budgets, and they don't want to just make experiments at scale.
So your argument is Wall Street isn't going to change, and scale is always going to be scale.
Correct.
All right.
Yep.
All right. I'm not buying it, but at least I understand it. Elitsa?
So I agree with Patrick in terms of it's necessary. Most of the vendors that we cover in management consulting, in IT services as well, they already have technology-enabled, solutions, be it asset-based consulting or, solutions that are generated together with technology partners or generated through developing own IP. We see it across the vendors. I think the more important part is that the process internally for the vendors, it needs to be very structured in terms of knowing how to capture your ideas, how to create the solutions, and how to make them visible to your clients. This is something that not all vendors necessarily do. And for example, if you look at the consulting segment, I'm sure many of the consultancies have their IP assets. They use them as part of the consulting engagement, but not all of them show them to their client. They don't list them. They're not vocal about integrating it into the strategy for growth as an enabler of consulting revenue growth. So it's really important to make sure that you show your capabilities to your client, you show the results, and you show specific use cases. So that's, marketing, in my opinion, marketing those solutions and, making sure that they are part of your strategy is really important for the vendors that will succeed going forward.
So coming from a tech-led perspective or general IT services, I would say we have noticed that a lot of vendors past year have been really investing in their brand and how their clients see them as they transition into these new areas. And I really think vendors' ability to quickly transform and appeal to their clients' needs and demand is really going to make a difference as to whether they're going to be able to continue to go or whether they will slowly fall out or be acquired. So, for example, Genpact, about a year and a half to 2 years ago, they had rebranded their whole company. They're a smaller business process outsourcing, and they launched a large rebranding initiative, and they also invested a lot of marketing into their automation platform, Cora, and that thus far has been working out for them. They have been able to grow their revenues a little bit more. So I really think that vendors' ability to transform into these newer areas is going to make a difference as to whether they will be able to continue to compete or not.
So I'm glad you brought up branding. I think that is a change that we've actually seen. I know Capgemini in the fall. How far back did that go?
Over a year ago.
It was over a year ago?
Yeah.
It's about a year ago now, yeah.
Yeah.
God, time flies. Okay, so a year ago, Capgemini did a rebranding. BCG just launched a new branding. So, and that's an important part of this, because I do think no matter how much the business model changes, no matter how much you deliver differently, if the market doesn't think of you as being different than you actually. If the market doesn't think of you in the way that you actually are and maintain a particular view of you and understanding of you, then you limit yourself not only within your own clients, but in terms of being able to go out and get other clients. It's one of the reasons that we saw a lot of the consultancies. We've talked about this on previous webinars. We've written about it extensively. We visited a lot of these digital transformation innovation centers, applied innovation exchanges, experience center. They've got all different kinds of names. But a real core driving reason to set one of these things up and to bring clients in was to show clients all the different things that you could do. Not that you were locked into one particular service that you were offering, but you were able to expand and show them. We heard this again and again from the folks that we spent time with at their centers, how it was important for their clients to come in and see that they did so much more than their clients thought. So branding and developing that, developing a brand that's going to reflect what's actually happening not only internally but also what's happening in the market, I think is going to be a really important part of this. So any other last thoughts? Alita, any last thoughts before we kind of wrap up the debate section here? We should have had a polling question, who won the debate. I didn't even think to put that in. That would have been kind of fun. Alita, anything else?
I think when you look at the IT services space overall, next year, our estimates are kind of, I would say, in line with what the poll results were. We expect for overall IT services, including management consulting, we expect, mid-single-digit growth to continue, even though there will be some pockets of challenges, and, Patrick talked about them earlier. I think vendors by now have developed their portfolios and are starting to capture and scale their transformational activities around cloud, around analytics, around the new next generation solutions. So there will be momentum going forward into the next year. I don't expect significant shifts into the IT services growth in terms of upward or downward trend. That low single digit to mid single digit will continue in 2019.
Thanks. So, and if you have questions, I'll bring up the bio slide in a minute again, so you can see. If you have specific questions for any one of us based on what we said, please feel free to reach out. We do have a couple questions that came in that I want to get to before we wrap up. One was relating back to the Japan example, the Japan PwC example, and the question is, what did the platform provide the smaller clients? It actually provided for the smaller clients the exact same service that it did for the utilities. That is an energy price forecast, and so they were able to use that to make their decisions, how they were going to take their risks and smooth out the volatility in the energy market in Japan. I think it's interesting too, because it allows PwC, as the provider of that subscription services and provider of the analytics around the energy market, it allows them to sort of play that against the performance of the different utilities and then the performance of the different small retailers, and sort of gives them additional insight into what's actually happening in the Japanese energy market, which of course is useful for lots of companies in Japan, not just in the energy space. A second question came in. It was looking at the broader picture, I guess. Which vendor can change fastest or will change most in 2019? That's a pretty loaded question. I think we probably all have a different answer to that, and this time I won't go first. I'll turn it to Boz, actually. He's across from me. Boz, who's going to either... So it's two different questions. Take whichever one you want. Which vendor that we talk about all the time is best positioned to change the fastest, I guess, and then, or if you want to, which one is going to change the most?
Yeah, I mean, I don't think we'll be a vendor out of our groups that we keep an eye on. It's close in the services and industry. I think it's for me kind of keeping on the group of vendors like the FANG, as you know, like Facebook and Apple and Alphabet and Netflix and Google, those guys. I think as we start thinking about the next wave of opportunities around 5G and whatnot and AI and just thinking about the speed of delivering services, I think all of the groups, when we start seeing the group itself transforming significantly, probably with the exception of Facebook, but and Netflix to an extent. Probably so between Google, Amazon, and Apple, and maybe throw Microsoft in that mix. I would say those four large technology vendors, I think, where we see probably the major shift in and start creating more of a threat to the service industry. I mean, they're kind of closing the loop on the technology cycle with building their own chips. We just heard Amazon announcing yesterday, starting to develop their own chips, essentially to kind of have more of a bargaining power against the chips they've been buying from Intel. We know Google's been buying chips from, they've been building their own AI chips and for a while now, and Microsoft. Those guys have been investing really heavily in the technology cycle. So now it's really about, as they start thinking about what's the backbone of the transformation, having the speed to market, accelerated, what's next for them and where do they go, and really be more aggressive into the services arms. And we know all of them have been developing their services arms. I think one of those guys who really pull the trigger on, really building up a significant services arm to go to market, either in a very exclusive partnership or a purchase. The other kind of out of a left field kind of idea that I always kind of keep in the back of my mind is thinking of Apple and the ecosystem they have developed with iTunes and whatnot. Is kind of the next kind of a node of the ecosystem is looking into the transaction business. And I mean, Capital One or any of the big financial banks, those kind of like provide all this data information of where they can go next and how they can do that. I mean, that's kind of a left field ideas from what those the IT services companies do, but that certainly will create disruption as we think about how the IT services vendors are developing and thinking about the CX space, the customer experience space, the applications that have been developed, how they've been delivered, and who owns the data, who manages the data, who's essentially ready to be liable for the data. So if you kind of have the ecosystem all in one place, you kind of build your own kind of a walls around it and trying to protect it and build it with, if you're taking the risk, you better get the reward basically at the end of the day. So long answer, I don't think personally, again, I don't think neither one of the companies that we really cover will make a major shift. Going back to my earlier comment, most of them are Wall Street reporting companies, publicly traded companies, so they can really make that shift significant as fast as they may want to. We heard that Accenture is kind of on the verge of pulling the trigger on a major interactive acquisition, coming pretty soon. So we'll see if that will play place. That will confirm and kind of solidify their bet in the interactive space. But I think some of the disruption will come outside the IT services space.
Alita, you want to weigh in on this?
Yes, and I don't disagree with Boz. He really covered the factors and the real disruptors. I think from the IT services space, most of the vendors that we see, they've been trying to implementing plans around internal reorganization, transforming their portfolios and moving along the new demand trends. You know, some of them are further ahead, others are still behind. Some, like IBM, are too large, and it's harder for larger companies to change. It takes longer time. Others are restricted by labor unions if they want to reorganize their structures, for example, in Europe. So there's multiple challenges for those vendors, and, you know, transforming both from an organization and from a portfolio standpoint is a challenge, and it takes time. So, you know, that will still go on, and I don't see a big shift in the IT services companies happening in the coming years. They will still have, you know, opportunities and areas to change going forward to be closer to demand. I think the ones that will succeed are the ones that get closer to the business. So knowing the business, the industry that the companies, that the clients operate in, and having those capabilities will help for the ones that are ahead in their transformation. So Bob talked about Accenture Interactive, and yes, we've seen Accenture, we've seen Capgemini purchasing companies that are small in scale, but they have something, you know, related to digital design. They have something, you know, offerings related to design consulting. And those capabilities, or they also add industry specialized expertise to understand the business and specific needs for the client. So those two vendors, you know, moving along those lines, get closer to the business, in my opinion, and, you know, gaining those capabilities that are not typical for an IT services company are really something that will help for the ones that, you know, are looking to differentiate and go ahead of their competitors. IBM is a larger company. It's harder to change, but it's also adding, you know, it has the IBM interactive experience capability. So yes, it has those offerings that are closer to the client's business. So it can be moving in a positive direction if you exclude the traditional IT services part that's really a stumbling block for the company.
So I agree, Elitza, on IBM, but I'm gonna pick 4 vendors that are going to change the fastest and the most. And I think it's important to understand their history in order to see why I think they're going to change so much. And so there's 3 pieces to this. One is their history, and the second is how they manage their talent. And then the third part has everything to do with what we're talking about today, this asset-based consulting and solutions-based services. I think the big 4 are going to be dramatically different in a couple of years from where they are now. And when you think about where the big 4 came from, with the exception of Deloitte, we all know the story. They didn't sell their consulting practice. Everybody else did. But so what? When those other 3 came back, they came back so fast and so strong that they rebuilt consulting practices that are massive now, especially in the management consulting space. So that's important to see, that they're able to grow rapidly and grow profitably from practically nothing. That's one. That's the history part. The other part that's important to understand is our perception of in particular, I'll call out EY and PwC, has changed a lot in the last couple of years, where they were consultancies that had technology capabilities a couple of years ago. They are now technology enabled. They are now on the leading edge with respect to a lot of the different emerging technologies that we see being deployed. They are technology-infused companies, consultancies, in a way that they were not just a year and a half, 2 years ago. So again, then slight tangent here, they're really good at managing their people, which, as we know from what we've seen looking at these vendors for years now, how you manage your people is directly related to your profitability and your success, the performance metrics that we measure. But then the last piece of it is that they have gotten very adept at managing and monetizing their IP, and as that becomes one of the critical levers for actually using, code instead of slides, how you manage and monetize your IP is something that the big 4, and here I would say it's really Deloitte and EY and PwC that we're very comfortable with talking about the way that they handle their IP and the way that they're able to leverage it not only for the solutions that they're co-creating with their clients or that they're co-developing with their technology partners or that they're rolling out on their own, but also being able to do all that in an environment that's both competitive but also dependent so much upon partnerships. I think their ability to manage and monetize their IP will actually be what allows the Big Four to take this moment where we're shifting from slides to code, where we're seeing asset-based consulting become the norm. I think that's where the Big Four are really going to step up and have the biggest change. And a year from now will be, all right, maybe 2 years from now, we're going to be talking about them in a very different way. I think they're going to be very different looking kinds of firms. All of that said, I recognize that they still have large audit tax practices that present to the market a different look and feel than everyone else. And so how that all plays out, we'll have to see. So with that, we'll wrap up. I'm going to let Sarah talk in 1 second. I do want to say on our site, you can find our predictions documents for next year. One of the things we've been talking about a lot today. We're about to release our latest management consulting benchmark. I believe it publishes tomorrow. So that'll come out tomorrow. And then if you really can't get enough of us, you can go onto YouTube, find the TBRI channel. You can see Boz and myself talking about Atos. You can see myself and one of my colleagues, Joey, talking about what's happening in the public sector IT services space. And then you can see a bunch of my other colleagues talking about cloud and IoT. So with that, thank you, everybody, and let's turn it over to Sarah to wrap it up.
All right, everyone, thank you for joining us today. Please feel reach out to the team with any follow-up questions. If you have a few moments, we would appreciate if you could fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us next Wednesday, December 19th, for Customer-Centric Digital Transformation. What's up with that? Thank you and have a great day.